Let's quickly get in. Feroze Azeez, Joint CEO at Anand Rathi Wealth. Feroze, good afternoon and welcome to the show, and a pleasure to speak to you as always at Eddie TV Profit. What is spooking markets at 12 noon?
Yes, good afternoon. Like I was hearing you say, the derivative indicators from an FII standpoint, and both the cash market and the derivative market, they've expressed a bearish view. In fact, I track about 4 short-term barometers, which gives us some sense of where the market is headed in the real short term. So I personally think the short position in the index futures, which has reached almost 84% yesterday, is a very good news from a rebound probability standpoint. Why? Because every time it crosses 80 on either side, the markets have a likelihood of moving in the opposite direction because जिसने बेचना था वो बेच चुका. That's the kind of sentiment for the last 12-13 times in the last 1.5 years. It's crossed 80 on either side. Almost all times, not almost all times, all times, this hypothesis has been proved right. So I would be vouching for a short-term bounce back. If the trade deal goes through better than expected, if you get a 250 points gap up, that's also algorithmically calculated, the short covering vicious cycle will stop. If there is a good news, and that happens, that's point 1 on the derivative indicator. The second derivative indicator is something called the synthetic futures on the weekly options basis. That's 24th, which is the next expiry. The synthetic futures quoting at 40 rupee premium from spot, the 24th. That implies for this expiry, the market is oversold for the subsequent 4 days. That's what synthetic futures also implies. So I'll stop here. So these 2 derivative indicators, I'm just telling you real time how they shape up on the terminal.
So Feroze, basically what you're trying to say over here is, in terms of the synthetic futures as well as the short positions that have been taken in the index futures, which has reached around 84% yesterday, that is giving you an indication that there is a possibility of a short-term bounce back in the markets. Correct me if I'm wrong.
Absolutely, yes. But what happens is, the one problem with the first indicator, which is the long short, is it does not reverse itself automatically. It requires some degree of cash market buying for that cycle to start. It can remain at 84 for the next 2 months. If there is any positive news which comes from cash market, which can give you that starting, you start a car, right? Then it moves. So that 16% long position and 84% short position by itself can remain like that unless there is a trigger from the cash market. And that trigger could be the trade deal between India and the US. Of course, US indicated that it's going to be the Indonesia way, which is not a great way, because they got Indonesia to agree to buy everything under the sun from them. But yeah, so that could be one of the triggers. Synthetic futures is the most short-term barometer, and that being at a 40 rupees premium for 24th April, 24th July, says that there is some degree of positive bias possible over the next 4 trading sessions. 70-80% probability. These don't go 100% right.
So Feroze, my other question that comes to you over here is, when you talk about that underlying buying that needs to happen in the cash market, if you talk from an FI perspective, they have been sellers. We've seen a sell number of nearly 12,000 odd crores in this week itself. How important will it be for the FIs to then come in to support this kind of an up move? Because DIIs have been buyers in the last couple of trading sessions anyways.
Yes, so see how we look at buying from DIIs. We like to real-time find out what was the money which came into all mutual funds yesterday. That is also algorithmically possible. Now let me tell you, on 15 July 2025, which is a couple of days back, the total inflow in small cap funds, which is a great barometer, 145 crores in active funds and 8 crores in passive funds. Now this you need to know before SEBI and FII also get the reporting. So how do you figure that out is a separate story. But this month, so far, small cap funds have got 2,641 crores. What does that mean? Why are we checking only small cap? Because if the money has to dry up from retailers, the first thing which stops coming in is small cap. अगर कोई डर जाता है तो पहली चीज क्या करता है, small cap के पैसे रोकता है. So if this month we have already finished getting 2,600 crores, which is higher than the same date of last month, I know there is enough dry powder in the domestic institutions which will bring in some buying at a point in time if not for a triggered upwards, but at least for a resistance downwards.
Feroze, hi. Mahima also joining in. Just want to get a sense on sector-specific views because there are private banks that are under pressure because of Axis. There's cement stocks doing well because of Nuvoco on the back of that. There's also insurance that's not doing well. Any sector-specific cues that you're taking up here?
Mahima, when I look at sectors at Anand Rathi, we generally look at sectors from a little more longer-term perspective, at least 3-4 quarters. I can tell you from that perspective, I'm very, very positive about interest rate sensitive. Why am I so positive about interest rate sensitive? Is because the fiscal deficit assumption, which is estimated to be 15.7 crores, for 15.7 lakh crores in absolute terms, which is what we track, not percentages, they are deceptive, will be lesser than 15.25 lakh crores. That's our guesstimate. If that were to happen, the yields will further soften and give you a lot of headroom for further correction in spite of a 100 basis point correction already. I personally think interest rate sensitive, auto has not run up. I think auto in the subsequent part of next financial year, this last part of this financial year, should do well.
And Feroze, the other aspect is in terms of yesterday's session itself, the way the put option and call option premium was moving towards close. I mean, it was really not, I mean, the call option premium, which actually came down to 0, your put options climbed from 40 rupees to almost around 85, and that kind of volatility which we've seen has not been receding. And you don't have a Jane Street in the picture right now because they are not trading. How would you actually describe this kind of an aspect as well from a derivative point of view?
Super. I have to get a little technical, but I'm sure it's worth understanding because derivatives today dictate cash markets also. Ideally, derivatives are supposed to be dictated by the cash market, but derivatives are so large in volume in India, across the globe relatively. So, see, whenever an option price moves, it has a certain movement which is genuine movement. For example, like you're saying, the put options went higher because markets closed lower. That's called the delta of the option. Delta of the option is the most genuine movement of an options price. If the market goes down and if by 100 rupees, if the share or the price of the option moves up by 30 rupees because of the delta, it means that the delta is 0.3. So yesterday's expiry, which was Thursday expiry, we almost closed at the lower point of the day. That's why some options, input options, went up because of delta. But if you look at the theta of the option, which is the time value left for the next 2-3 hours, was reasonably low because the 1st July circular, this 1st July circular, I think, has not been decoded well. Maybe if you think you're here, you need to understand it at a point in time, we can decode it separately. It's the best circular which India has ever seen in the derivative space. And the executive director and the group of SEBI professionals have done a phenomenal job to make sure that the odds of a Jane Street again happening, or this instance happening, is lowered significantly. So coming back to your point, I think yesterday's Thursday expiry or the Sensex expiry were very calm expiries from a other Greek's perspective. Only Greek which was moving the price was delta, and delta is a genuine Greek for price movement of an option.